Hey, how you doing, everybody? How you doing? How you doing? We got a real big show.
Your voice sounds deep today. Is it because you were out last night?
I smoked a few cigarettes. I smoked a couple cigars.
What else?
Reefer.
Reefer?
Reefer.
What? Anything else?
Yeah, magic mushrooms.
They're not legal.
No. Oh, nobody told me that.
I don't think they were magic. I think they were just mushrooms.
They were just mushrooms.
Yeah.
Dry.
Fungi.
Anyways, we got a really big show here today. We've got four different guests today. 4 different guests from pre-recorded. Yes, they were pre-recorded today. We have Dmitri Zaytsev here joining us again. We're going to talk about the Kelly Criterion, which, if you don't know what that is, you want to listen to this because it's pretty important. We're going to talk to Anthony Dutton from Cannex Capital, who has just raised a big schwack of dough and his stock's on fire. And we're going to talk to John Fowler from Supreme Cannabis, who just closed a $100 million bought deal. Thank you very much.
$100 million.
$100 million. And we're going to have Clint Sharples here from Heritage Cannabis, which is pretty much one of our most anticipated stocks, I'm going to say, because we own a boatload of it. Woohoo! Anyways, look at the new logo. Ed, do you see anything about the new logo that you don't like? No? Okay, how about the news? Here's the news.
I like it.
Thanks, James. Aurora Cannabis Inc. received final regulatory approval and completed the acquisition of ICC Labs. Aurora will acquire all of the issued and outstanding common shares of ICC for $1.95 per share, representing a purchase price of approximately $290 million. ICC will now be a wholly owned subsidiary of Aurora. Completion of the arrangement follows receipt of approval from the Instituto de Regulación y Control del Cannabis, I'm sure I butchered that, the Uruguayan regulatory authority overseeing the regulation and control of cannabis in Uruguay. Aleafia Heath Inc. announced that their previously announced joint venture and financing transactions with Saruya Private Equity have closed. The closing formalizes Aleafia's acquisition of a 51% in Flying High Brands Inc., a domestic and international cannabis brands joint venture, and a 9.9% interest in One Plant Corp., a Canada-wide cannabis retail joint venture. The closing also marks the completion of Saruya's $10 million strategic investment into Aleafia, Aleafia's $1 million investment in Flying High, and $4 million investment in One Plant. Namaste Technologies Inc. announced that the company's wholly owned subsidiary, Cannmart Inc., has signed a product acquisition agreement with WeedMe Inc., whereby Cannmart will purchase medical cannabis from WeedMe to offer it on its online platform. The company's goal is for Cannmart to become the leading online marketplace for medical cannabis in Canada by offering the largest selection of product. Origin House announced that they are accelerating the expiry date of all outstanding common share purchase warrants of the company issued. Pursuant to the warrant indenture, the company may accelerate the expiry date of the warrants in the event that the daily volume weighted average share price is greater than $8 per common share for a period of 15 consecutive trading days. The company confirmed that as of the close of markets on November 21, 2018, an acceleration trigger had occurred. In total, there were 1.9 million warrants issued, which are the only remaining warrants outstanding in Origin House. Each warrant is exercisable into one common share at a price of $5.50 per common share. Accordingly, if all the outstanding warrants are exercised, gross proceeds to the company will total $10.6 million. The proceeds from the exercise of the warrants will be primarily used by the company to expand its footprint across California. Lineage Grow Company Ltd. announced the signing of a definitive agreement to acquire California-based Agri Farms. Agri Farms operates a fully licensed and fully operational 40,500 square foot greenhouse facility and a 3,000 square foot craft-style indoor facility in Yolo County, that's in California, with an annual production capacity of 6,000 pounds of cannabis. Lineage will acquire a 100% ownership interest in Agri Farms based on an implied enterprise value of US $6.6 million. ReadyCan have issued a statement regarding complaints received indicating the company's cannabis flower products sold on the Ontario Cannabis Store website contained mold, and insect infestations. The company stated they are committed to dealing with the matter seriously, urgently, and transparently, and will investigate, resolve, and address any such issues with the best interests of its consumers. ReadyCan stated they had received 5 complaints out of 500,000 units sold and have never received such a complaint since they became an LP in 2014. Accordingly, ReadyCan is voluntarily requesting the return of all units of their BEC branded products. And that's your news today.
Of all units, ReadyCan.
Do you smoke any Redican, Ed? You smoke any bugs?
Not anymore.
Smoke any bug?
Oh, I thought it was buds. You said that.
No,
it's light up a bud. It's light up a bug.
To light up the bugs.
You get those from ReadyCan.
It's called Bug Bud. So like it gives imparts a really unique flavor to the bud, and if you have the right kind of bug.
Well, bugs, people eat them for protein.
And some of them are hallucinogenic, I've heard.
They're what?
Hallucinogenic.
Okay, I know. Okay.
What?
I thought you said. I said sonogenic.
Yeah, photogenic, telegenic. Photogenic and telegenic, Ed. Which are you? Okay, no more tough questions. I get it. So anyways, what do you think of the markets today? It's in mid-Thanksgiving long weekend.
Oh, I'd say nothing's going on.
I want to say, because oh, look at that. I had my hand in front of your face. Can we switch back to that shot just for a second?
Wait a minute.
There.
No.
There.
No, right there.
Smack.
That's like that hand thing for the brake thing. Midas brakes. Midas muffler. They have the hand that comes out and says, "Talk to the," and he's got a little face on it. And
oh no, I've not seen.
You got to see that commercial. It's beautiful.
TV. So there you go.
I thought that's what that was.
Nope.
Anyways, Midas Letter.
I wanted to say to all of our American friends, happy day. That was my turkey imitation, in case you didn't know it. Happy Thanksgiving to all of our American brethren. And it's Black Friday.
What's the
Black Friday?
What's the term turkey neck? Is that
turkey neck? That's when you've got like 3 chins and they're like as you're getting old, they like jiggle around when you talk. Gobble, gobble, gobble. And you start to gobble, 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 gobble. How do you like your coffee? Gobble, gobble? Anyways, enough of this tomfoolery. We're going to look at markets quickly right now, and then we're going to move on to
I haven't really paid that much attention to it today, but...
What? Are you okay there, Ed? No dying on the show. That's the one thing that's not allowed here. Okay? That would be actually a good way to go. Right on the show. Maybe I'm incurring some evil forces by saying such things. Anyways, here is our beautiful, beautiful indexes. We're looking at the large cap index is up 0.5% today, which is okay.
We'll take it.
Yeah, we'll take it.
You know, they're not dropping anymore, are they? Like, we've had a few days now of stability.
Well, it's Thanksgiving weekend.
What are you saying? There's less volume on Thanksgiving?
Well, there's a lot less volume because the economic center of the universe is closed. Squirrel! Anyways, so yeah, the cannabis small cap is up 0.5%. The venture index is down 1/3%.
Yes.
And the Midas Letter CSE index is up 0.5%. So without any further ado, I don't know about you, but if you haven't heard of the Kelly Criterion, some of the biggest minds in the market are using this formula to invest. And it's a mathematical equation that's supposed to help you grow your money and is something anyone can use. It's generally used for bet sizing. And first we're going to take a look at this little conversation that Liz West had in her pursuit of an understanding of what the Kelly Criterion is. And then Dmitri Zaytsev is going to join us for a deconstruction of how we can use that to buy stocks. Here's Liz.
Do you know what the Kelly Criterion is?
Oh, no, I can't. I don't know. I'm sorry.
No.
No?
No.
I have absolutely no idea.
No.
A name of a person?
No, I'll be honest, we're from the United States, so that name doesn't sound familiar.
Oh, I think it's an American formula.
Yeah, I'm not really a scientist.
I have no idea.
No?
Not a clue.
Not a clue.
No.
Okay. The Kelly Criterion was invented by scientist John Kelly in 1956 after reading a news story about the game show The $64,000 Question.
Yes, the $64,000 question.
Some viewers were placing bets on which contestants would win. The show aired live on the East Coast. It was delayed 3 hours on the West Coast, and one West Coast gambler learned the winners by phone. He placed his bets before the West Coast airing, and you can guess the rest. This gave Kelly the scientist an idea. A gambler with inside information could use a set of equations to achieve the highest possible return on his capital. The Kelly Criterion is often used as a money management formula that calculates the optimal amount to bet when there's a difference between the given odds and the true odds. So it goes like this. Let's say you have $100 to bet on a horse. The parimutuel odds are 1-to-1. That means if you bet $1 on the horse and it wins, you make $1 profit and get your original dollar back. You have some insider information. You know that the horse you're betting on has been outperforming in training. You've calculated that there's a 60% chance your horse will win the race. That means you have a 60% chance of a $1 profit, worth 60 cents on average, and a 40% chance of a $1 loss, averaging 40 cents. Subtracting that, you get an expected gain of 20 cents for every dollar you bet. That's a 20% edge. The Kelly formula says to bet edge over odds. In this case, that's 20% over 1. You should bet 20% of your bankroll. That's $20 of the $100. If you repeatedly bet too much, there's a good chance you'll eventually go broke. With the Kelly rule, you'll make money over time and reduce the risk of a big loss. So how do you apply this formula to the investing world?
The Kelly Criterion is a very quantitative method. You really have to be able to estimate the returns of a particular investment, what sort of edge you have. And one of the most important rules that the Kelly Criterion tells you is that if you don't have an edge, you shouldn't be invested in a particular thing. So the more inside knowledge you have, the more detailed it is, the more you should plow into a particular gamble investment. The Kelly Criterion has been very popular with many big investors from Warren Buffett to Bill Gates. They all confront this central issue that it tries to deal with. If you consider yourself to be the smart money, that generally means that you think you have some sort of informational advantage, some sort of edge. In Buffett's case, he does this marvelously elaborate due diligence of the companies he's thinking of investing in, but he still has to decide how much money he's going to devote to any particular investment. So that's where the Kelly Criterion is very useful.
For Midas Letter Live, I'm Liz West.
Why, thank you for that, Liz. That was spectacular. Now, joining me here is Dmitri Zaytsev. He's an analyst of some repute on the street, mostly because he's so successful at a very young age. I don't know how you do it. Dmitri, do you use the Kelly Criterion?
So I don't use it specifically, but it's an extremely important framework for approaching trading and options especially. So when you're approaching any kind of risk-reward, you have to be bet sizing properly. If you go all in on an option or you go all in on some position, you have to know what your payout is, right? And you have to be preparing for that.
So this is just a way to reduce risk then?
Yeah, so the whole point is being able to sustain returns over a longer period of time.
Okay.
So for example, if you're playing a game, a card game, or stocks or whatever, buying options, if you bet too much, your principal will be reduced so significantly that you can't continue to play.
That happened to me with Juju.
Did it?
Yes. I went in whole hog of not really paying attention to the amount, the percentage of available cash that I was committing, and subsequently, when I realized that it was not going to go the way I wanted, it took me too long to get out, and I experienced a significant loss, which I'm still suffering from today.
Well, I think a lot of retail investors are feeling the same way, maybe, not just with Juju. But there's a saying, I think, more attributable to Warren Buffett, where he says, if you know exactly what you're doing, don't diversify.
If you know exactly what you're doing, don't diversify.
Because that's how you make really big wealth. If you can make, if you make really
I've been doing
concentrated
this for
moves.
years and it's not working. Maybe I don't know what I'm doing.
Maybe, yeah.
Okay, so now let's take a look at, say, Canopy Growth.
Sure.
I'm a simple investor. How do I deploy the Kelly Criterion to make a bet size if I've got $100,000 in risk capital?
Right, so you'd have to think about, it's a little bit more complex because Kelly Criterion is just a binary bet. So you're saying, is it going to be a payout or not? Whereas with stocks, things can go sideways, things can go up, things can go down. So things go sideways, it's not that big of a deal for you. Maybe there's opportunity cost and things like that. But generally, you have to say, on Wall Street and various quant firms that use algos to trade, and they do something similar where they backtest a lot of the time. So what they do is they look historically and they say, hey, when these technical indicators or these whatever
fundamentals,
some kind of combination of indicators say what has been the return profile over the next week, month, whatever. That's where you have a lot of momentum funds. So if you've ever heard that term, where in essence, if the momentum is positive in a stock, especially tech stocks has been very popular, these funds pile in until the momentum stops. And so that's how they kind of apply the Kelly Criterion and other,
So is that something that is like a preliminary exercise in, if you say, okay, this company's volatile, we want to get behind volatility because we can make money, but first let's run the Kelly Criterion and see how big our bet should be?
Yeah, so on your example with Canopy, this is how I would approach it. And we can talk about the cannabis stocks in a second, but you say, hey, we've had this huge decline. Historically speaking, after Canopy's declined 30 to 40%, how much more downside is there? So you ask yourself that, and then you say, all right, what's my potential upside going forward? Why? You do an analysis, you come out with some kind of odds that you think, but this is more of a continuous betting type strategy.
Okay.
So the issue there is your sample size with something like Canopy's, we've only had how many runs and collapses, maybe 3 or 4, right? So
Sure.
over a couple of years. But the way I'm approaching it right now is I'm a lot less bearish on the cannabis stocks, maybe overall, because we've had this huge decline.
Okay.
And the chances of a decline continuing more than 20 or 30%, I don't think are too high.
Huh.
So
What about if the geopolitical macroeconomic picture continues to deteriorate in terms of trade tensions with China?
Yeah, so the way I'm approaching things right now, as we've spoken previously, and this is what I tell a lot of my friends, is you should have gotten a lot of cash around October 17th, and right about now would be the time where you're starting to maybe dip your toes back in a little bit, but you still have a lot of cash because you want to capitalize on any big flushes, some bad news coming out, and especially, I'd be, like you said, watching the geopolitics. So some of the key things to be watching is the G20 meeting in a week or so. Then you have the Fed meeting. So if they talk about hiking more aggressively, sell everything type approach. That's how you want to approach it.
Okay.
And it's just everyone else is going to be having that same ask questions later type approach. But on the other side of that, if the Fed says, hey, we're going to maybe relax a little bit, Trump and China, they sign some kind of deal, maybe Democrats and Republicans work together and get infrastructure done, things will be very interesting, and you might get some more risk on. But so just going back to what we've talked about, what you see after these big mania phases is you have this cool down period where a lot of retail investors that entered are underwater and they're frustrated, they're upset, and they slowly give in. So what I'm waiting for is for more of the retail investors to liquidate over the next coming weeks and months, and for a more firm investor base to develop of longer-term retail, longer-term institutional investors that see some value in these companies, which will create a base, and we're in that beginnings of that process right now. And then as the catalysts come forward in the next maybe 6 months to beyond, they will enjoy, I think, the fruits of their patience in that sense.
So what about tax loss selling? Is that a factor in the downdraft right now?
I think so. I think it affects some sectors more than others. tax law selling season is usually seen as October to November, let's call it, end of November. So we're right about ending that now. The thing with the cannabis space, I mean, we really had, you know, it was great until the last 6 weeks or so for most investors. So maybe a lot of them are still in denial, you know, the 5 stages of grief and all that, where they're trying to come to terms with it. But yes, that's definitely an overhang, not just in cannabis stocks, but across, you know, North American equities, I think.
Sure. So it sounds like, from what I'm hearing, you're suggesting that it's not really going to be an attractive market to you until January.
Yeah, so I'm waiting to see how those things play out. I would say I'm nipping very lightly on names that I like, such as Canopy, CannTrust, good names. But as well, I'm more heavily focused in the U.S. And so like we've talked about before, the U.S., more and more markets are opening up. I think they're going to surprise in terms of how much quarterly revenue some of these guys have. I think
surprise to the upside?
Upside, yeah.
Really?
I think so, yeah. Over the next, well, at least
That
relative.
would be a surprise.
Yeah.
What? Revenue? What? Cannabis company? Come on.
But relatively to the Canadian story, which I think the rollout has really adversely impacted a lot of these names, as we've discussed before. And so the next 2 quarters, I think, will be somewhat disappointing, and you know, versus analyst estimates, versus peers, versus the U.S. comps. And so you might have a lot of investors, you know, throwing in the towel here and there. And do you really want to be part of that? I personally don't.
So what about the idea that we're an inch into a marathon? Like, so this is, yes, there's short-term, you know, surges to the upside, corrections to the downside, but it's all within a narrow band of volatility if you consider the long-term potentially. If, you know, if the cannabis market global value is $1 trillion in maturity, then today's volatility doesn't really matter if you're investing for that longer term, if you think you're going to see $1 trillion market within by Christmas.
So my counterpoint to that would be, you know, it's not a small range. I would say the volatility is not a small range. So, and it's pretty easy to exploit. I think if you have a few brain cells to rub together, you can sort of see how it all works out.
Well, that's me out of the mix.
Hey, don't be so hard on yourself. But listen, the reality is, if you are a long-term investor and you're not looking at this stuff, you wouldn't be engaged with all of this, you know, Reddit, online forums, Midas Letter, because you don't care. You know it's going to be $1 trillion market. You're certain. You have better things to do with your life than stress over wweed stocks. So
actually, I don't.
Yeah.
Okay.
Yeah.
Well, so then what's your normal threshold time horizon for your investing style?
Yeah. So I mean, a lot of what I'm doing right now is option writing. So I've mentioned it before, but with that, I have a finite time horizon of 2 to 3 months, let's call it. But typically, let's say it could go from even a day, within a day, to many months, my time horizon. So an example, you know, these would be examples we've chatted about before, but like CannTrust, let's say, in the summer when I was telling you about my interest in that company.
Right.
And so that's something I held for a couple of months. Another example would be something like Cura or some of these other U.S. names that I've bought recently, and you know that they've done pretty well. And I'd probably be scaling out with the whims of the market sometimes.
Right.
Yeah.
Okay. Well, that's great. We're going to leave it there, Dmitri. Thank you very much for your participation. We'll come back to you next week.
Absolutely, James. Happy to be here.
All right. Next, I have Anthony Dutton from Cannex Capital checked in, and this is what we had to talk to each other about. Welcome back. My guest this segment is Anthony Dutton, CEO of Cannex Capital Holdings, trading on the CSE under the symbol CNNX. Anthony, welcome back.
Always a pleasure to be here, James. How are you?
I am doing well, thank you. I see your stock has got a little bit of fire underneath of it lately. What's happening?
Well, I'm sure you saw our news release from yesterday. It's something we've been working on for a while. We're extremely happy about having Gotham, obviously, as a strategic investor, and I think that has caught the market's imagination, and they know exactly what these guys have done before, and we're hoping to repeat it.
Sure. And what have they done before?
Well, as you probably know, they've done an amazing job with Ianthus. They're also a pretty significant force behind Kronos. And just generally speaking, they've got an excellent name in the cannabis sector as probably the smartest investors in this sector. We've been so impressed with their process, so impressed with them as a group and as individuals, and it's a real pleasure. And I don't want to get too superlative here, but an honor to be working with these guys. They're a fantastic group.
Awesome. Well, so now what? Now what are you going to do with all that money? You got $32 million in the bank from them. What were the terms of the financing?
So it was a convertible with a conversion price at $1.10, no prepay for the first year, and then some warrants at 150, 200, and 300% of the what's called the reservation price, which was 88 cents.
Okay, interesting. And so, do you have your eye on any opportunities currently that you might devote some of that capital to?
Absolutely. So we've always maintained right from the get-go that our objective, and this is right from before we were even public, was to become a multi-state operator. And the MSO nomenclature has only really been popularized in the last couple of months, but we were always focused on being a multi-state operator. We were always focused on the processing, manufacturing, brand, value add side of things. We have a number of things that we're looking at, and obviously Gotham bring a phenomenal pipeline of deal opportunity to the table as well. So, that will be, I think, a marriage of both capital markets expertise and a marriage of, a very, very strong relationship and a very strong network of possible opportunity.
Sure. So, being focused on the U.S., are you sensing that the U.S. is approaching a level of maturity in its cannabis build-out at this point, or would you say it's still very early days?
Well, the U.S. is a kind of a curious character, if you will. I mean, Canada is further ahead, obviously, on the regulatory side and on the capital market side, and the U.S. is still a Schedule I drug, which impacts its ability to be managed, if you will, from a federal perspective. But operationally, we see things in the U.S. which are significantly further advanced than anything in Canada. And I think a good case in point is our operations in Washington. We have got a phenomenal foundation there. We've got very strong protocols, SOPs that can be plugged into any jurisdiction, any state, any country, anywhere. And, I think one of the things that Leo and his team in Washington have had to their advantage is they've just been at it for, quite some time. And that's allowed them to really, generate some expertise. We're seeing the same thing in Nevada, same thing in Arizona. I know you've done a recent tour through California. You probably saw some of that yourself.
Right.
So, overall, we see some very exciting, what I call operationally focused businesses in the U.S.
Wow, fantastic.
And ultimately, one of the things that I'm sure I hear you talking about it with some of your other guests. 2018 was what I call kind of a year of almost bubble valuations, not a lot of substance to some of the companies that we all know. And we're already seeing, the pendulum swing the other way. And I believe that 2019, and I think that Gotham would agree with this, 2019 is going to be a year where the investors, both institutional and retail, start to look at the operating fundamentals of the sector and of individual businesses. Because ultimately, you have to be able to survive as a business. You have to be able to be profitable, support yourself, and ultimately that's going to be how the good companies are going to be measured.
Sure. So right now we're talking, is it 17 states are legal medically?
Oh, no, I think it's a 29 or 30. It's hard to keep track. I know Illinois and Michigan just came on recently, and the next one I believe is New Jersey. So, ultimately it's going to be all 50, I believe. The other statistic, which is kind of almost more interesting, is that 85% of the American population live in a state where there is some form of cannabis regulation, whether it be medical or recreational.
Mm-hmm. So which states excite you more than others?
Well, we obviously like California because it's so big, but we're also very cautious in California. I believe that California is going to be a company maker for many companies. It's also got the potential to be a company breaker, because if you kind of go down a rabbit hole or pick the wrong strategy or allocate capital and too much capital too quickly, you could find it, be problematic. So we like California a lot, but we're, proceeding with caution, as it were. We also like Nevada. We like Arizona a great deal. Florida is another state that's got a lot of appeal to us. Some of the asset values there are pretty significant. And then the Northeast, Massachusetts, New York, these are always going to be popular states simply because of the population base.
Right. So what about the remaining 20 some odd states? Is there any indication that they are going to jump on the medical bandwagon and maybe the rec too?
Yeah, I think so. I think it's just inevitable. I mean, ultimately, it's always, in any business, cannabis is no different. Follow the money, follow the jobs. We saw in New York, for example, where the governor of the state, kind of accelerated their legalization initiatives because he realized that he was going to be losing, tax dollars as people went across state lines to buy something in dispensaries in Massachusetts, for example. I think it's really going to be nationwide sooner than we think.
Okay, and what's the revenue picture looking like for Cannex this year?
It's looking pretty strong. So if you look at our operating business, the one that we own the assets of through our holding company, that could be sort of in the mid-30s US dollars of revenue that flows through to Cannex through a holding company structure. So our revenue should be, in the region of sort of 10 to 12 million from Washington alone. And, obviously, as we plug in additional states, the revenue profile could improve significantly from there.
Right. Great. So tell me, what in Washington, what's the most popular product that you supply?
Well, we certainly sell a lot of the marmas, which are jelly. I think you might even have seen them or at least had some. We sell a lot of those. We launched a new line of mints, which are doing very, very well. Vapes, both disposable and otherwise, do extremely well. We do see a swing towards what we call the derivative products, and that's no different in Washington than everybody else, everywhere else. As new demographics come into the market, new consumers, you're going to see, I think, more products on the derivative side going off the shelves than you are going to see straight flower. Flower will always have an appeal, obviously, but for people who don't smoke currently, it's unlikely if they're going to become a new consumer, they're going to start smoking something. So, vapes, edibles, chocolates, that sort of thing is very, very popular. It was interesting. I was at the MJ Biz conference in Las Vegas this week, and you walk around the floor, and virtually everything was about the derivatives market, whether it be THC or CBD. People are selling equipment, they're selling packaging, they're selling product, they're selling all kinds of things, and I would say 80% of it is focused on the derivatives market.
Interesting. Okay, so now what are you hearing about federal deprohibition in the United States? Is that making any progress?
It depends on who you ask. We hear a lot of discussion about it. I mean, I do not have a beeline into any federal bureau or any federal discussion. So I'm not, I just have my opinion. I think Trump in many ways, as much as, he's a pretty, controversial figure, he's actually, a very powerful force in favor of federal deschedulization or federal legalization, because he's a big believer in states' rights. In the midterms, that we lost Pete Sessions, who was quite a big obstacle to any kind of federal initiatives. And then obviously Jeff Sessions, no relation to Pete Sessions, has stepped down as AG. So I think that, with the overwhelming, and I say overwhelming, as 65% of the American population, support legal cannabis in one way, shape, or form, all of those data points bodes very, very well for, I think, it being rescheduled and federally legalized in some way, shape, or form, maybe not in this administration, but certainly in the next.
Awesome. And what about the States Act and the Farm Bill that we're hearing so much about? How's that going to impact Cannex?
Well, at this point, it won't have a great deal of impact because that's primarily around CBD. But at the same time, Cannex is, like most companies, realizing that CBD is a huge opportunity, and we're looking at a number of opportunities in this area as well. So obviously, if that passes, that's only going to accelerate, our interest and everybody's interest. So for the time being, not an immediate impact, but longer term, as a part of our larger, more expansive strategy, absolutely will have an impact.
Well, that's great, Anthony. Well, it sounds like you're doing really well with your new investing partner there. Let's leave it there. We'll catch up with you soon and come out for a visit. Thanks very much for joining me today.
I will be there probably next week, so hopefully more to talk about then. So we'll see you hopefully midweek.
I'll look forward to it. So, Gotham, you know who these guys are?
No.
So they're the guys who funded Ianthus, and they were the guys behind Kronos. So now that Anthony's got $32 million to spend, and Gotham is in, so Gotham, you know, this is a very sophisticated cannabis industry investor who's already had several successes. So I think that we have to now look at Cannex in a new light. Just by way of disclosure, Cannex was previously a client, and they will likely become a client once again.
What's the ticker for Cannex?
CNNX on the CSE.
This guy sounds quite intelligent, eh? This guy sounds quite intelligent.
Anthony's he's smart. He's speaks really well. Like, he's one of my favorite interviews because he speaks so well.
Look at this thing. Oh my God.
What, the CNNX?
It was 80 cents 3 days ago.
It was 60 cents a month ago.
It was 70 cents 8 days ago.
And did you buy any, Ed? See, this is what happens when you get Midas Letter behind you. Rock and roll, people. Not that we're going to try to take credit for Anthony's, you know, partnerships.
Well, I know. Why wouldn't you?
Well, may as well. Yeah, that was all us.
Yep.
That's a good point.
And
so,
where is he based? Washington?
He's based in Vancouver.
Vancouver, Washington, or Vancouver, British Columbia?
Vancouver, British Columbia.
Because, you know, there is a Vancouver, Washington.
I know.
Oh, what are you going to do about that, Pilgrim? So, yeah, I was in bed at 10 o'clock last night, but apparently you were not.
No, I had to solve some of the world's more pressing problems last night using a sophisticated array of recreational substances, which resulted in actually a damn fine time had by all. And tonight I'm going out to do it again. No, just kidding.
Oh, yeah, but you have a big dinner tonight, right?
Yeah, how'd you know? Big dinner.
I overheard you.
Am I going to have a big dinner?
BD.
I might have a small dinner. Maybe I'll just have a salad. Maybe I'll order the sardines. Sardines. Ed, do you know how many guests we have today? We have 4. So we've had Dmitri, we've had the Kelly Criterion, we had Anthony Dutton, and
without further ado, let's go right into the next one.
You think? We've only got 2 left now, though. I know. Actually, the one that I want to throw to next is John Fowler. John Fowler from Supreme Cannabis. Here he is. Welcome back, my guest. This segment is John Fowler, President and Director of Supreme Cannabis Company, trading on the TSX venture under the symbol FIRE. John, welcome back.
James, always a pleasure to be here.
Yeah, so lots going on in the world of Supreme, and foremost amongst them is you're no longer the CEO.
Absolutely. So we decided to amend our roles a couple of months ago. So Nav and I have been running the business together for almost 2 years now.
Right.
And really seeing as the market was evolving, it allowed us to play to our strengths. It allowed me to focus on our Canadian and international operational rollout, really building big long-term businesses. But at the same time, it allows us to give a little more attention to the market and start looking at the leading edge as we look to expand our business from Canada into international markets.
Okay, international markets. My ears perked up. Where are you going?
Well, as you know, we were the first LP into Lesotho, where NAV is right now. So that's our MediGrow investment. We believe MediGrow is on pace to be one of the largest producers in the world of high-quality GMP oil. And it's that GMP certification that is key, because we can take that product and bring it into markets like the European Union and others to create medical products for consumer demand there.
Sure. So what is the size of the growing operations in Lesotho?
So MediGrow is a beautiful spot. So it's up on top of the mountain, pristine environment, no pesticides anywhere near. So really a great place to grow lots of cannabis for extraction. We brought one of the largest CO2 extractors for the cannabis industry and put it on site. We expect that'll be producing up to as many as 40,000 liters per year once it's fully commercialized.
40,000 liters of extract.
Correct.
Wow. That's impressive. Okay, so what's going on at home here in Ontario?
So the big one for us is obviously the recreational launch for our 7 Acres brand. I think, you know, we've heard brands being talked about probably ad nauseum for the last 12 months, and we took a different approach. We tried to build our brand organically, really identify a core consumer, the cannabis enthusiast, consumer that we believe is going to drive 70 or 80% of the cannabis spend in this country. These are your daily and weekly consumers. And we really understood what drives them, and that's the smell, the look, and the flavor of their cannabis. So it's not effects driven, it's not marketing gimmicks, it's really great cannabis pitched authentically to the consumer.
With being able to understand what the
take a moment to look at the social media feedback, it's quite clear that we can say we're succeeding in our goal to be Canada's leading premium brand of dried flower. And the response from PEI to British Columbia has really just been phenomenal.
Oh, really?
Oh, great. Okay, so are you selling it into the government-run stores?
Yeah, well, you're not supposed to fly them within 9 kilometers
Absolutely.
of an
So we're
airport
listed in 6 Canadian provinces, and we're currently working to supply the demand there. You know, as everyone knows, demand is well ahead of supply.
I fly there all the
and I
time.
think that's something if you're investors and as Canadians, we should be excited about.
Put the thing
I think somehow it's played as a bad thing in the media, but for companies like ours, knowing that the massive amount of demand is there, demand that we saw, you know, when we first met, we were the ones that 50,000 kilos in one facility was considered huge. We saw the size of demand, I think, before many companies did. We saw the demand for quality before many did. We've built a brand specifically for that.
There's no limit to how high they can go.
We're selling some of the most expensive cannabis in the country.
Really?
Our sell-through rates are very quick, and our feedback is strong. What that means is we can build a real long-term brand for premium, and that drives our economic model.
Sure. So you're selling on the retail side.
I'm having a hard time pulling the trigger on this purchase.
Really, you've got it. You've got sort of every corner covered. What's the big catalyst coming up in 2019 for Supreme?
So I think the big one for us is starting to look at adding the rec revenue. So our last reported quarter, we crossed 5 million. That was an important milestone for us. I think, you know, revenue growth has to be a prime consideration for any consumer goods companies, meaning all cannabis companies. And if you look, we're really punching above our weight. You know, if you look at where that 5 million puts us, we're well ahead of some peers with greater market caps, and we're quickly catching up. You know, we're only 4 or 5 times behind some of the market leaders, even though they might have 10 to 20 times the market cap. So I think as we continue to execute on that story, it's going to be quite exciting. And then for us, the next one is products, taking that quality flower and starting to look at things like vape pens, things like oils. And as you saw recently, we announced our deal with MediPharm Labs.
Interesting. So 2 days after legalization, you announced that you'd done a $100 million bought deal, which is certainly punching above your weight, one would argue. Who was the sponsor of that?
We worked with GMP and Bank of Montreal.
Oh, okay, fantastic. So you're well cashed up for all of your hopes and dreams in 2019.
I say they're a little more solid than hopes and dreams, but we do have a lot of ambitions ahead of us. And I think, you know, our first goal was to create Canada's top premium brand. Right. And premium is important to us because premium is a far sexier economic model. It's better margins, better price point. You're less focused on cost and you're more focused on driving your revenue point up, which we've done successfully. Now we can take what we learned. We've learned how to build great facilities, we've learned how to build strong management teams, and we've learned how to build brands. And now we can start applying that to downstream products in Canada or the downstream products we plan to create with our partners MediGrow and Lesotho.
Sure. So as a premium cannabis supplier, do you realize a premium price in the retail marketplace?
Absolutely. So I'll give you an example. Our flagship strain, Jean-Guy, it's a...
Jean-Guy?
Exactly. It's a homage to an old French strain that we've developed internally. And in a province like Alberta, that went in as the most expensive 3.5 gram SKU in the province. I think it was a 10 to 15% premium to the next most expensive SKU. And we sold out on the Alberta web store in I think about 48 hours.
Really?
So it shows that demand is there. It shows consumers are willing to pay for quality. And our goal is, as much as, you know, we want to enjoy economies of scale and manage our costs going forward, our real goal and our real drive for the 7 Acres brand is to look at, if Jean-Guy can sell for X, how can we develop a better strain and a better commercialization strategy to increase that price point over time. It's a strategy that has worked with epic success for the US wine industry, taking wine consumers and over the course of years and decades, moving them up the ladder in price point from, you know, the box and bag wines when you're in college, you know, up to some really nice bottles of wine when you're little later on in your years.
Yeah, that's great. So it doesn't cost more to grow premium cannabis than it does average cannabis, does it?
I disagree. We actually run a lot of cost to get there.
Okay.
Our return on investment is good. So our increase in sales price is greater than our increase in cost.
Right.
But we do things. So for example, we run a lot of labor to manage the plants and inspect the plants when they're growing. You've been up there, you see how we clean them up and get the uniform canopy. It's similar to if you grow grapes for good wine. To make really great wine, you actually have to spend money to manage your vines, reduce the amount of fruit you grow per acre, but the fruit you get is better. It makes a better wine, a better economic model. And that is true of how we deal with our plants. It's true of our whole day, 2-week whole plant dry. It's true of our hand polishing process. And even when it comes to bottling, we actually fill every bottle by hand to make sure the consumer gets the right assortment of large and small flowers so they get the right experience. You add all that up, certainly there are costs, but when you see a price point like Jean-Guy in the Alberta market and the sell-through, you know that's money well spent.
Sure. So in Lesotho, is the same sort of approach to growing quality, premium caliber cannabis supply?
So obviously the economic model there is a little bit different, but it's still a premium model. So why we chose Lesotho is we think they can grow cannabis there better than some of the other, call them low-cost jurisdictions. And we think that some of the elements of the plants we're growing, the location we're growing in, and that team can drive premium brands downstream as we look to bring that product to market.
Okay.
We have that premiumization in our blood, and it's something that whether it's recreational products in Canada or wellness products for the world, we're always going to look to find that premium revenue source.
Sure. How many kilograms do you expect to grow in 2019?
Quite a lot.
That's it, quite a lot. More than. So I guess you just haven't had a chance to sit down and do the numbers.
Absolutely. So we're ramping up. So what we are excited about, the 7 acres flowering rooms,
right,
on pace to be complete construction by the end of the year.
Okay.
And when you build in the licensing time and the ramp up, we're looking for that full run rate of 50,000 kilos in the middle of 2019. So we are quite excited where we're building. Obviously, we're getting started as well on our expansion project in Lot 16 to bring an even higher quality product to market, again, chasing a higher price point. And then we're excited to continue to work with our partners in Medigrow to bring that product to market as well.
In terms of the Canadian marketplace, where the government is managing the distribution of cannabis, they're continuously out of supply, and the LPs seem to be out of supply too. Is it really the case that all of the government-sponsored distribution channels are consuming all of the cannabis, or is it more that the distribution infrastructure is not sufficiently built out yet to take all of the cannabis from all of the LPs?
So the supply chain as a whole was never in a position to supply all of the Canadian demand. I've been saying that consistently for 2 or 3 years now. Remember, we have up to a $10 billion domestic market. And if you add up the revenue of every LP combined, let's say for last year, we're a couple orders of magnitude short of that. So we knew undersupply would be the nature of the game for the near term.
Right.
We've built our strategy to lever that to accelerate the growth of our premium brand. But for us, it's about the one-on-one relationship with the provinces, making sure they get what we promised to them, but also ensuring we work with great companies like Tilray and the medical channels to keep the Canadian medical program supplied as well. So that diversification of our revenue also allows us to support both channels and do our part to start getting Canada to a more fully supplied environment.
Sure. Is the margin from the medical channel more, less, or equal to the rec channel?
In the near term, our medical margins are preferable. We get some of the highest price point in Canada for our B2B, especially on our spot sales. And that doesn't come with the selling costs of packaging and marketing, right? That goes through to the LP retailer. But over time, we think that we're going to have very favorable margins on both. Again, it comes to that premium pricing strategy, that's ability to increase our price per gram quarter by quarter. So if you look at our last few reported quarters, I think we've been one of the best in terms of revenue growth, and I think that's exciting. But if you dig a little deeper, you're seeing increasing price point per gram as well.
Right. Interesting. Well, John, it sounds like you're knocking it out of the park as usual. Great update. We'll love to keep up with what's going on. Thanks for joining me today.
My pleasure. Looking forward to seeing you again soon.
Well, Ed, I gotta say that John Fowler and his team.
Did they just raise a bunch of money?
Yeah.
Like $100 million?
Yeah. Bought deal.
Wow.
Convertible, or not a convertible debenture, but a debenture. Oh, now I don't know what I'm talking about. So I wanted to look at the chart here and get your take on that.
Oh, over here.
Yes.
I'm so impressed with looking at myself. Like, it's hard not to. I can understand why so many people watch us.
We're going to have to turn Ed's monitor off because he's staring at himself nonstop here.
Who is that handsome
See, I told
guy?
you were telegenic. So Canopy Growth shed, what was it? Oh, it went up a penny now. It's up a penny.
What do you think? I need a little more makeup?
Do you have some makeup on? No. It's not working.
No. You know what? Look at and I'm just saying this has a very, very strong base in the 140 to 150 level, which is where it's at.
We want to see some graphics there, Ed.
All right.
Nobody knows what you're referring to. Yeah. But while Ed's getting his chart up, I just want to remind everybody that today at the end of the show, we have a new feature that is supposed to be killer, and I don't even know what it is. It won't tell me. So I'm going to be watching at the end of the show. So you should too.
Why is that?
Okay, back to Ed. Back to Ed and his screen.
Yeah, I don't know. Something's wrong.
Something's wrong.
Something's rotten in Denmark.
Something's rotten in Denmark.
It's not...
You're having a tough time there, Edward. Okay, you know what I'm going to do? I'm going to go talk to our audience because our audience rules. You know we just started streaming on Twitter, so if you haven't noticed, we are now streaming on YouTube and Twitter instead of YouTube and Facebook. Why? Because on Twitter, we get way more peeps. All right, Ed's got it figured out. Over to Ed's NDI now.
Ed's NDI. There's a big support level there. Big support level.
That's all you got for us? Is this big drunken line?
You know what do you want me to tell you? Like, they just raised some money.
So what's the support level?
It's really right around there and there. Yeah. So like a...
What's the number?
Buck 30-ish. Buck 30-ish.
Chicken 30?
Chicken little.
Chicken little. Okay, so $1.60 is the current trading price.
Yes.
And they closed $100 million.
Right.
And, well, I had the piece of paper here, but somebody's taken it away. I was going to tell you about the financing. But we're not going to. Look at that beautiful logo, eh?
I love it.
Yeah. So anyways, I was going to go say hello to some peeps in the audience here.
And I did buy a little MedMen here.
You did?
Yeah, just for a trade. Just looking
to
maybe...
Pull up a chart on that, why don't you?
All right.
What do you think's going on? What do you think's going to happen with MedMen?
Well, it just, you know what? It's been a brutal... we talked about that deal and the repricing, and you could argue that the pessimism is great, and yet here's a day it's quiet. Why is this thing moving up today? Friday, up 34 cents, close to $5. You get close to 5.20. If it gets over 5.20, it may make an assault on that 5.50. And then, it could pop here 5.60, 5.70. So I'm looking for 50, 60 cents.
Okay.
Just saying.
Simon Cleary, who is one of our audience guests. Hello, Simon, says, we love Ed.
Oh, Simon, I love you.
There you go. A little love fest going on in here.
MedMen.
There's Mark Blaski just logged in and said, has Clint been on yet? No, but we're going to put him on in about 8 minutes. So, yeah, that's going to be fun. That's a hell of a story. Do you know that, well, we'll talk about it when we get there.
No active session now all of a sudden.
Midas question from 30 mil. Where do we think the companies come up with their estimates of the market? For that, I'm going to say that they either use investment bankers' research from their analysts, or they might use a consultancy like BDS Analytics,
or the accounting firms always have these firms like
accounting firms all have their own estimates.
Deloitte's a big one.
Deloitte, Ernst & Young.
Thank you. I was trying to say Ernst. Wait a minute.
That's Ernst & Young. You did that in my voice. I'm a ventriloquist now.
No, I did it. I made you say it.
No, I just said
this.
that.
I'll prove my point.
Ernst & Young. Ernst & Young.
Okay.
Oh my gosh.
Burn and flung.
Ed, they want to know what your take is on FSD Pharma. Huge.
Look. And again,
Tag is the viewer's handle. Tag wants to know what you think of Huge.
Okay, my session's been active. I think of this. I was really amazed at what they did. They priced it so that everybody had a chance to make money, and if you're a believer, you made a lot of money.
Yeah.
Now it's pulled back. It's pulled back a little too much. I'd rather not see it pull back. I like to see a stock hold at least half its high.
Right.
If it gets, I think, below 45%, it makes a lot of technical guys nervous. Like it becomes like a busted stock. And that means that so many people are in higher than lower that it's hard to get through them.
Right.
So what do I think? I think they've done a great job. billion 3 shares outstanding.
Do you think when they conclude their merger with the Nasdaq-listed pharma company that's going to be a game changer for them in terms of the share price?
You know what? I've looked at that thing. It looks very interesting. I don't know much about it, but there's not a lot of shares in that shell.
James Albert says, Ed is the best co-host ever. Way better than Paul Schaefer. You're really getting the love here today. What is it, Ed? What did you do? Did you like whisper some of your sweet nothings into the YouTube
into the cockles of
what's going on? Okay, so Rocky Holmes, hello Rocky, wants to know CGC and ACB in 5 years. Where do you think?
You know what? I can't. I'm not that guy to ask that one. I'm too technically oriented. Like I'm looking at charts. I'm looking for patterns to start. I want to get in a pattern early and then get out.
Okay, I have no problem sticking with my long-term prediction since 2 years ago that it's going to $100 in the case of Canopy Growth and Aurora.
You said $20 the other day.
Well, somebody said 20. What do you think that Aurora goes back to 20? But I think I'm comfortable saying that I think Canopy is going to breach 100 before it carries on to set higher highs at some point here. I think Aurora is going to have a harder time getting up over $20, $25 because it's got such a big float. However, they could surprise with some serious revenue in the next couple quarters, and that will change everything. James, from zero to Trump, how screwed are we on Juju?
From zero to Trump?
From zero to Trump, how screwed are we on Juju?
You know, I don't know. I mean, like, what? You know what? The structure, there's cheap stock out there. I mean, you know, they're...
Yeah. I don't know.
We were supposed to go to 50.
Yeah, I still own like just under $1 million, I think. And,
at this stage, it's probably worth sticking around and seeing what's going on.
Well, the tax loss selling is going to end December 15th.
Yeah.
I might actually make Juju my tax loss sale. I mean, I've had some wins. I'm going to have to offset that.
Well, you know what? You know, you'd be foolish to hold if you got to pay taxes on those gains. Offset them with some losses.
Yeah.
Clear the decks.
Yeah.
You can always buy something else.
Okay, I'm going to sell it all now. No, just kidding.
You could switch it all into Crown.
That's an idea.
And you know, just well, we got to be careful what we say about Crown, but you don't have to be too careful.
Ed, you own a bunch of Crown.
I own a ton of Crown.
You own a ton.
No, I'm betting on that copper gets.
Is Crown your largest position?
Yeah. I got 2 positions, and one of them's Crown, and it's by far
Missionary.
The largest. Missionary, kneeling.
What? That's good to know. 2 positions, Crown and
kneeling.
Kneeling. Okay, great. Anthony Alvarez has a question for us. Oh, he's reporting back from his wife.
Reporting back from his wife.
Yeah. So Anthony Alvarez, whose wife is from China. We were talking about CBDs, remember? And I said, I don't think that there's too much consumption in China. And he wrote and said, you know, my wife's Chinese, and she says there is some area where they're big into it. And he writes back that the name of the town in China that produces their own CBD oil is Guizhou in the mountain region.
You don't mean Wazoo?
No, Guizhou. Guizhou. So that's interesting. So they're producing CBD in China now. I wonder... if
you know, I bet you there's a lot going on in China that nobody knows about.
Well, probably.
I mean, it's, you know, there's only 1.4 billion there or something, right?
Yeah.
Must be fascinating. It must be just fascinating. 5,000-year culture, you know, and everything. And
Rick R. is wondering if we're talking about Crown Royal, the whiskey. But I'll tell you what, if it goes to 75 cents in the near term, are you going to drink some Crown Royal?
Right on the show.
Crown and Croak. Crown and Croak. So you're going to get tipsy on the show.
I'm going to be...
Anyways, it's 4 o'clock now, and I want to lead into our next interview with Clint Sharples from Heritage Cannabis with this thought, that Heritage...
Was he the gentleman that was here last night?
Yes. So Heritage... Clint, yes. Yeah. Heritage is, I think, right now my largest position.
Is he Irish?
I don't know. I don't think so.
Okay.
I think I don't know. I don't think we talked about ethnicity last night, but Ed, he's started 5 businesses that collectively are currently producing over $100 million in revenue annually. This is the new CEO of Heritage /
So he's what they call the rarest commodity in the small cap game. And then you know what that is?
Profitable entrepreneur.
Well,
Market's closed.
It's called the operator.
The operator.
A bona fide operator, as opposed to a
smooth operator, coast to coast, LA to Chicago. Anyways, here's the interview with Clint Sharples.
Operators are rare.
Well, I guess this segment is returning for, I believe, the 3rd time. Clint Sharples, President, Chairman, and Director of Heritage Cannabis Holdings Corp., trading on the CSE under the symbol CANN. Clint, welcome back.
Thanks. Great to be here again.
Yeah, so Clint, this company, Heritage Cannabis, is starting to take the form of a large-scale LP. And full disclosure, I own shares. I'm likely going to be helping you on the marketing side, but I continue to accumulate shares because I see Heritage Cannabis as potentially becoming a very successful company based on what you're doing. So let's start with an overview of all the parts that make up Heritage right now.
Sure. I'm not sure about large scale, but we're definitely aiming for a mid-tier category or status in this Canadian cannabis market. If you remember the first time I was here, we had 75% of one late-stage applicant at the time, and a company called Fiamed out in Falkland, British Columbia. Fiamed got their license in July of this year and has progressed and moved forward with building additional greenhouses and now is taking a second step into extraction along with another deal we're doing. How you came to become a large shareholder of Heritage is we completed an acquisition of Cannex Corp. Based in Fort Erie here near Niagara Falls. Cannex, what it gave to us was a very large facility with a lot of options that can be had inside 122,000 square feet. Their current build with the cannabis that they're growing right now is one great section, but our expansion plans are going to be pretty fun. We have some nice things planned there. And then the third thing that we're just in the process of completing, if I have a good day today, it'll be done. If not, it'll likely be completed next week, is finishing our definitive agreement with Pure Pharma. Mm-hmm. Pure Pharma is a extraction company based out of Kelowna, British Columbia. A group of guys who have been doing extraction for years and are extremely good at what they do. They put out some fantastic products in the past, and we're looking at taking their knowledge and their expertise, particularly in how they do things. They have a unique process, a unique setup that we can take that, expand it into our Cannex facility here in Ontario, and also expand it with Fiamed out in British Columbia. So they have the 2 LPs. Cannex got its LP here in October. So now Heritage has 2 subsidiaries, both with LPs. We'll have a third who focuses on extraction, and that extraction will happen both out in British Columbia and here in Ontario.
Mm-hmm. Okay, so you've got, besides that, I saw a press release recently where you're taking delivery of a large crop of hemp. So the thing that sort of made me pause about talking about the company at this point was that, it's going to be a little bit of time till you start producing product and get it into the market, but turns out that you've actually got product on the way that's going to be extracted by, I assume, assuming this deal finishes with Pure Pharma, and you're going to have product available December?
It'll be a little bit later than that, probably late January, early February. We do need some licenses in order to complete that. But yeah, there's an absolute monstrous amount of hemp coming our way. Part of what Pure Pharma had that was really interesting to us was a long-term agreement with 1,600 acres. And if you think about that in terms of size, that's a massive amount of hemp.
Right.
That's currently harvested in Saskatchewan, being dried, being processed. and will be shipped into our facilities both in British Columbia and Ontario once we're set up to receive them.
Yield of biomass per acre, roughly?
Depends on the strain right now. They have a couple of different strains, but you can probably be safe somewhere in the 50 kilogram range per acre.
Okay, so 1,600 times 50 kilograms is 80,000 kilograms. Now, 80,000 kilograms, it takes roughly a ratio of 6 to 1 to create extract from that?
Yeah, again, it depends on what you're producing and how efficient it is. Internally, we use the numbers 8 to 1. We're always conservative with what we do, but yeah, when you look at that's 10,000 kilograms of oil.
Yeah, so 10,000 kilograms of CBD concentrate, exactly. And now what's the going price for CBD concentrate?
That's a good question too. Because the market right now, twofold. Number one is just getting set up and legalized, I should say. People are kind of feeling their way around in the dark. That's one. Number two is the scarcity of this product is unbelievable. We have no end of demand for producing this product. Again, once we get licensed and can properly sell it, we're internally budgeting somewhere in the neighborhood of about $40 a gram.
Per gram?
Yeah, per gram. Yeah,
not kilogram.
Not kilogram, but we believe we can possibly get more, particularly.
So $40,000 a kilogram.
Yeah.
So $40,000 times 10,000 kilograms of biomass. Unlike mining, where you can't actually extrapolate what the value of this stuff is because you got to get it out of the ground. This stuff's already harvested. All you got to do is extract it. $10,000 times, or 10,000 kilograms times 40,000. I mean, I just love that math. $400 million.
Yeah, it's actually it's $40 million. But yeah.
Okay. See, I'm already trying to promote myself.
I'm good with $400 million. I'll take that.
A couple more crops till we get there. Okay, so great. So where are you going to sell that CBD product?
Lots of options. So we have options inside BC, inside Canada, down into South America, and a massive demand happening in Europe right now.
Right.
As you know, Europe's probably the largest cannabis market in this world. Not probably, easily.
But don't you have to be EU GMP certified to ship into Europe?
Yes, you do. Yeah, you need to be able to work with somebody who can get that certified, and that is exactly what we're looking at. We don't need it. We can do everything that we produce. We can sell here in Canada easily. It's going to be whether or not we can open up European markets, and if we can, are we supplying it here in Canada, or are we going to supply it from somewhere else? We also have we've had many conversations with other cannabis producers who would like access to our extraction technology and the guys' know-how. When I say that they're good, they're an extraordinary group of guys in what they know and how they're putting things together. Shouldn't just say guys, because they have a lot of women on their staff who are extremely very talented too. And we can take that and we can bring it down to, just throwing out areas of Jamaica or Colombia or something like that, or Portugal.
On the European doorstep. Okay, so the thing that also really impressed me when you acquired Canacure, I thought, okay, well, this will be interesting to see what happens. And then when you told me that you're not really interested in becoming a large-scale grower because there's lots of large-scale growers from whom to purchase feedstock. And so is that kind of the business model of Heritage going forward, where you're not going to necessarily focus on becoming a grower so much as a extractor and producer of consumer-branded products?
And that's kind of up in the air right now for us. As it sits right now, we'll be growing dried flower to fulfill current market demands and requirements. In the future, our internal grow, a lot will be focused on what we grow for extraction. Many people believe, and I did too until I really learned more about the business, was that you can extract almost anything. You can take any cannabis product, throw it into an extraction machine, go back 8 hours later, and there you go. You've got some oil sitting there. Yeah, that was wrong. Yeah, it's, this is no different from anything else. You need beautiful product going in to get beautiful product coming out, and it can't just be anything. So we need a lot of raw material. We need a lot of feedstock coming in. So we will be doing it ourselves. We will be working with other growers. We will be working with micro cultivators who want to get various forms of oil too.
Right. Okay. Great. Then you've got a pro forma sort of idea in terms of what you're going to be producing in EBITDA in 2019 and 2020. What's your target there?
Well, we haven't talked publicly about this yet, so it's we have a target. We would like to see our company. It's a very staged approach to how we go. Q1, well, we're still working on extraction licenses. We're still working on sales licenses, which we have the ability to sell LP to LP right now. Both Cannex and Finamet have those licenses, and that's great. But we will go get our license to be able to sell anywhere. That'll come sometime in Q1. Right now, the process is largely out of our hands. It's all within Health Canada's processing ability. So our Q1, a little bit of revenue. Q2, significantly more. Q3, significantly more, and then Q4. It is. I hate
Q4, Katie bar the door.
Yeah, I hate using the term hockey stick because everyone brings financial projections as a hockey stick curve and puts a lot of pressure on the tail end. But we really do have the inbound product that can be producing the outbound product that will come to fruition.
And the thing I like most about this whole transaction is without the CapEx requirement. So you're not going to build a 970,000 square foot ultra state-of-the-art greenhouse anytime soon. You're not going to need $100 million to get to positive EBITDA.
No. All of our money, we've done a recent raise. We just completed a raise of about $7.5 million. After lawyers and fees and stuff like that, given what we had previously in our bank, we're sitting with about $8 million in cash right now that will be deployed based on best ROI. I come from a private company background, and you live and die by your cash positions and your return on your investment. And that I do relay the same thing into what we're doing right now with Heritage. So we will get ourselves to the point that we're on to the trajectory of continual revenue growth, and I mean continual not just for 2019, through 2020, and then be able to demonstrate to the market that that is exactly what we're doing, this is how much we're going to do, and by when. And then if we need to go out and raise more again, I certainly don't want to do it at my current prices because I'm not happy with where our stock price is. You and I have had this discussion. I believe we're not just undervalued, but grossly undervalued.
Right.
So if we're ever to go and look for additional capital, we would like to get some revenue through the door and demonstrate to the market how more is going to come through and how profit is going to be achieved.
Sure. Okay, so you are not new to building companies. Tell me about what's the global annual revenue of all of the companies that you have built and currently manage right now?
Okay. Yeah, Heritage would be the, it's kind of the fifth or sixth, depending how you look, because I built one business twice, fixed it when it fell down again. So Heritage, call it the fifth company that myself and my group will be behind. Somewhere we'll be around a little north of $100 million in annual revenue of what we've done, just north of 2,000 employees. So it's building businesses is exactly what we do, and I think when you look at cannabis, and I tell this to everybody when I'm talking to them, because everyone was surprised that come October 17th, or even a month later, there's massive product shortage. Well, that's because you had an industry worth billions of dollars that on October 16th technically didn't exist. October 17th, now you have billions of dollars worth of potential revenues to be had and to be grabbed from an infrastructure that is unbelievably incapable of filling that pipeline. They will fill it. It'll take time. The problem is you need to build a business then. You're not just talking about building or growing plants here. You're not just talking about throwing up a bunch of greenhouses or building a 1 million square foot facility. These are building actual businesses, hiring real people, having HR departments in place, getting your accounting system set up, all this stuff that if you haven't done this before, if you've never built a business before, you're in for quite a ride.
Right.
There's a reason why not everybody goes and does this out there, because it's hard. And those people that, when you go and talk to them, anyone who's ever built a business, they say the same thing. Says, yeah, it's difficult.
Okay. Where are the big risks in this whole grand plan?
So we talk about it constantly internally within Heritage. You can be distracted every single day. Opportunities come every day in this industry. We talked about it yesterday when you and I were talking about an opportunity. We call it chasing squirrels. You're walking down a path and all of a sudden a great opportunity comes and complete focus shifts somewhere else. You can't have that. You need to be able to focus on what you're doing, go through, accomplish, get it behind you, move on to the next. However, you have to do that without losing the potential for a great opportunity. So it's being able to nurture and to keep things bubbling on the outside while you're completing your core business and getting to achieving the goals you've set forward.
Right.
Which is why in Heritage we separated. We sat down as a management group. I tweeted out a picture of that showing us meeting as a management group. We have a 60, a 120, and a 180-day plan. And those plans include us completing very integral parts to be able to handle the growth that we're expecting as a company. And we will complete those. However, at the same time, if opportunities come along that we feel are important to us, that we want to continue to add to what it is we're doing, as long as it's, we look for evolutionary, not revolutionary, so we don't want to change everything we do every time you see a great opportunity, but I don't mind tweaking things along the way as you find something comes along that looks like it's worthwhile.
You bet. Okay, so great. So the 60, 120, 180-day plan sounds like you're going to have revenue, you've got feedstock coming, so the next time we chat, which I guess will be probably within a couple of weeks, we're going to see where you're doing. Thank you very much for joining us today, Clint.
Yeah, always happy to be here.
So yeah, Heritage, what are the risks? What are the weaknesses? Well, the company is going to have 400 plus million shares out after the Canacure deal. Well, I guess they do have over 400 million shares out now. They have
He seems like a real businessman. Like he seems like a guy.
Yeah, no.
That he's done other things, right?
Yeah. He's got $100 million in revenue this year from his other 5 companies. So to me, I look at that and I say, well, this guy, he knows how to build a business. He knows how to run a business. And so if he's going to take a swing at this whole Heritage mixture of assets, I feel that he's probably got a pretty good eye as to what's going to work and what's not. Plus the fact that they bought 1,600 acres of hemp off of a Saskatchewan farmer, that's like, well, what a good idea. I didn't even know, like, why didn't instead of building, $100 million facilities that, put all the risk in the capex that you got to pay back before you're reporting a return to investors.
There's other ways to do things to accomplish.
Well, that's just it. So there's 400 million shares out. So if he can put out 4 to 6 cents a share in EBITDA, that's like $24 million. So that's not going to be hard to do. He's got $40 million worth of cannabis sitting there, 1,600 acres of hemp at 50 kilograms per acre, 8 kilograms.
Did he buy the land or he buy the crop?
No, he bought the crop.
Yeah.
So this is the thing. He's telling me that they're not really planning to spend much time buying land or becoming big growers, as long as there's feedstock readily available for their extraction operations.
Because that's where you extract. You can extract from. You don't have to have a high grade flour.
No, you don't. If you're just like, you can extract, isolate, and concentrate CBD from any feedstock that contains any CBD. So hemp typically has less than 3% THC.
But you can extract it and concentrate it. So it's about quantity of hemp.
Exactly.
So
it's what's you got to ask yourself, what is the content per kilogram of CBD or the content per gram?
So he's obviously a businessman. He's analyzed it. He's looked at the sort of the okay, well, it's this. Okay, we're going to end up with this much money after the thing's over.
Yep.
And he's got a good margin in there in case he's wrong, but he looks like an operator.
Yeah.
Smooth operator. Like, remember that one what was it? What's her name? Tina Turner. She did that song, "Private Dancer." I'm your private dancer, dancing for money.
What about?
I think that
best before date
a lot of
is
guys
over.
around the Bay Street know what the hell's going on in that little song.
Yeah,
private dancer. Anyway, well, this is interesting. I like to see. Now, the U.S. market is closed the second half.
Yeah.
The S&P is right down. This is the nerve-wracking part for me right now. I'm looking for a rally, and it's just it's right there. Like let's put up a chart here. I'll show you what I mean.
Okay.
And this is the S&P 500 again, ladies and gentlemen. S&P 500. Survey says. Okay, so this is a very short-term chart, 10-day. I'm going to put up a 10-day chart. And here we go. No, let's put up a 1 month. Okay, so this was the day back in here when I called in sick and couldn't because my nose was running. That was the low that I thought would be a low. It had a good rally. Now it's come all the way back. Like that's that W thing we were talking about.
Right.
So here we are staying, red candles, but that's okay because we're not really going anywhere. We're down a little bit. So where's the pen? The pen. So my comment would be, maybe this thing's got a problem. Okay. That whatever that low is, at the bottom of that tail, and then we've got these lows here. And if this can stay like this for a few days, it won't.
Lows? We don't see any lows that you're drawing there.
Well, but okay, so there's a low. Like they're not as low as this low. That's the key.
Okay, but nobody can see what other lows you're referring to unless you draw something.
Right.
Those lows.
Yeah, those lows.
Okay, so that's the support base.
Yeah. Well, yeah, but this is a support because it really bounced hard off of that. Okay.
What symbol is that?
That's SPX.
Oh, okay.
SPX. That's the 500. That's the index.
Right.
So look, and then if we I don't know if I can do this. No, I can't. Anyway, doesn't matter. Anyway, I'm saying so far so good. Everything looks in place, and if we get a bid there, watch Amazon, watch Apple. If we get a bid in the the U.S. market, the cannabis stocks will get sucked up into the bullish vortex of commerce. Ooh.
Beautiful. I love the sound of it.
Vortex.
So somebody wants to know why Aphria is not not emulating the patterns in the market. So it's dropping, but it's not recovering.
It was up 6 cents today, and you remember it's up 17 cents. Sorry, 17 cents Aphria. Do you remember back when Constellation? We were doing the show. Constellation came in, and I said, I'm a little puzzled by why Aphria isn't participating. And then a few days after I said we noted it, it got a lot of action.
Right.
So sometimes don't just because you're wrong today and tomorrow doesn't mean you're not going to be right Tuesday, Wednesday.
Well, that's a good point, Ed.
Just as long as everything's under control. Like Aphria's a big company, someone might take a run at it.
Yeah. Well, actually, I know that they made an investment through a special purpose vehicle into Green Growth Brands.
There you go.
Which that could really suddenly
pay
turn
dividends?
into something. Could pay dividends.
Little pun.
You're talking figuratively.
Yeah.
There's no risk of Aphria paying dividends anytime soon, I don't think. However, if they partner up with Green Growth Brands, and Green Growth Brands decides that they don't want to be a grower, they just want to be a packager and a marketer and a brand developer, that might be the perfect combo for Aphria. They can focus on doing what they do best, which is growing high quality, arguably. I've not smoked any Aphria, have you?
Like certificates?
Smoked any Aphria?
Certificates? No. Aphria pot?
Yeah. No. Watermelons. Like, yes, pot, Ed, pot.
Is it legal? I don't know.
Do you want to smoke one right now?
I'm gonna light up a reefer in about half an hour. Just a Friday night, take the edge off. What about last night, and the night before, and the night before?
Yeah, well, no, I'm on a dinner tonight, and I'm going to take it easy this weekend.
Really?
Yeah.
When you say take it easy.
Yeah.
So where are you going to have dinner? So maybe I can come crash it and embarrass you.
I'm not telling you.
I can embarrass you.
I'll
just keep following you.
Well, I'm going to run then.
I got a bicycle.
Yeah, but do you know how to ride it?
Nope.
Anyways, so what do we got going on next week? I'm in Los Angeles for 3 days next week.
So who are you going to have to host the show next week?
You?
Oh, interesting.
Yeah, Brandon Colwell from Follow the Money is going to sit in with you a couple of days, and maybe even Mr. Steve Meisner might even grace us with a visit.
Oh, Steve.
Yeah. And then, of course, we've been trying to get Bruce Linton back in here, but
I want to do an interview with a biotech company out of Calgary. I think you've interviewed the guy before.
Yeah?
He tells me there's some things happening.
Okay.
I think they need money, though. So is that usually...
That's why they come here. Yeah, no, we've got some great new companies coming next week. We've got Steve Meisner is going to be here next week. Let's just take
Ianthus is down 4 cents. Chiron's down 4 cents.
Yeah, the audience is asking for MPX to be on. They want Beth from MPX. So the studio is listening. Let's get MPX here, but we want Beth. We'll have Scott Boys back, of course, as well. But the audience is really clamoring for Beth for some reason.
Beth?
Yeah.
Is Beth from Bethlehem?
No. I don't think so. She might be. You never know.
I bet you there is some connection between Beth and Bethlehem in terms of, like some of these names in the Bible are very intertwined, like Rachel and Rachel. Anyway, you know what? I've gone too far. I've gone. MPX, there's MPX there, up 2 cents, 95.
Next week, we're going to have Eddie Lucarelli here. He's the CFO of Canopy Rivers. And Canopy Rivers has been doing some interesting things very quietly. So it's interesting. This is one of those stocks I think that is suddenly going to explode one day. Neptune Wellness CEO Jim Hamilton is going to be here next week. We haven't talked to Neptune before. And also we're going to have Pure Global CEO Malay Panchal.
Now there used to be a... No, I'm thinking Nautilus, not Neptune. You see the connection, eh? Neptune, Nautilus?
Well, nautical. Nautical in nature. Pelagic in origin.
Wow. What's the word?
Pelagic. Means of the ocean. There's a big word for the day, Ed.
Okay, I'm going to give you another word.
Okay.
Littoral. Littoral.
That means of the shore.
I'm impressed.
Yeah.
Nobody knows that.
Really?
Well, that's a pretty...
archaic.
How do you get littoral and shore?
I have no idea.
Yeah, that's right. Yeah, littoral.
But,
yeah. That's, words are fascinating, and the bigger your vocabulary, the easier it is to circumvent the world.
Yeah.
Not circumvent, but...
Yeah. So... that's our show for this week.
Navigate the world.
That's our show for this week.
So I'm going to be here Monday by myself.
You're going to be here?
With you. No, you're not going to be here.
What do you mean I'm not going to be here?
You're going to California.
I am?
When?
Tomorrow. No, Monday.
Monday.
You
got a good voice.
Well, no, it's not really a good voice. It's just that I can hold a tune.
Okay.
Maybe I delude myself. Maybe that's not something that the... So I'm going to say hello to some of our guests here. Kemp Weeding and Weed is here again. Kempco Consulting. Oh, Rich TV is here. Rich, we got to get Rich on. Rich TV is... he kind of does what we do.
I think we got to just get Rich.
Well, Rich is getting rich. But we're going to team up with Rich. I met him during the summer, and sorry, Rich, I haven't got back to you. I'm here to tell you that we're going to start doing things together a lot more significantly in the new year, maybe even next week. But I'll come out and see you, and we'll get this back on track. So Rich from Rich TV is going to be one of our sort of partner sites, sort of channels. There's also Departure Capital,
We're going to have him on at some point next week. So also next week, we're going to have Charting Man Dan is going to be here every Tuesday starting next week.
That's good.
Yes, and also we're going to probably... So we're going to be talking to the ETF operators next week.
Good, prudent advice.
Yeah.
Okay.
All right, then. So now if you want to see who actually helps this show exist, we're going to show you who the people are that make all this possible. What does that say?
Oh, you know what? There's a birthday surprise or something coming.
Surprise? Surprise. Surprise! Midas Letter RAW!
Woo! You know, I like this. It's delayed a bit.
Oh my God, the sky is falling.
But you're waving at yourself.
No, I can actually move my hand and back before that one. That guy, that idiot over there, he's trying to copy me and he can't do it. Watch this.
Yeah. Wahoopta has committed to invest up to $2 million. Wahoopta has subscribed.
Sure, when is that?
St. Patrick's Day Parade?
Yeah.
Christmas.
They should have it on St. Patrick's Day.
Wahoopta? Who the fuck came up with that name? Jesus Christ. Let's How much money can we...
It's all frozen. Everything just froze up.
Naturally Splendid Enterprises announced that Wahoopta... Oh, God. Am I saying that right even?
Can you talk for 2 minutes?
Can I talk for 2 minutes?
Yeah.
Sure.
Okay.
You mean talk to myself?
Just relax.
You're leaving?
I'll be right back.
Naturally Splendid Enterprises announced that Wahoopta... Shit. Okay, this time for real. No laughing. Thank you very much for watching. Don't forget to subscribe. Tell your friends how much we hate you. Thank you.